All right, let's talk about something we all depend on but probably never really think about, the insurance that keeps food on our tables. Now, I know what you're thinking, insurance. Sounds a little dry, right? But trust me, it's this massive hidden gamble. We're going to dive into a fascinating study from Italy that pulls back the curtain on why this is one of the riskiest, most complicated insurance markets on the entire planet and why governments are pouring billions into it. Let's get right into it. So, let me just start by asking you a question. What do you think is the absolute riskiest business to be in? What comes to mind? Maybe a tech startup burning through cash? Or, I don't know, high-stakes Wall Street trading? Well, there's a really strong case to be made for something way more, well, down to earth. You guessed it, farming. Just think about it for a second. Farmers are basically entrepreneurs, right? They pour huge amounts of money and time and labor into their work, but their success, it's completely at the mercy of things they have zero control over. We're talking about the weather, pests, diseases, not to mention wildly unpredictable market prices. And that inherent risk, that's really the heart of the whole issue. It's the main reason governments all over the world, but especially in Europe, get so involved in agricultural policy. They're trying to weave some kind of safety net for a business that is just fundamentally unpredictable. And the stakes here are just enormous. I mean, a single hailstorm, one bad drought, that can literally wipe out a family's entire income for the year in just a few hours. So the obvious solution seems like insurance, doesn't it? But as this research shows us, when it comes to farming, it's not even close to being that simple. So this brings us to the core problem. A major takeaway from decades of research is that a purely private market for crop insurance, it just doesn't work. It pretty much always fails without the government stepping in somehow. So the big question is, why? Well, the first big reason is something called systemic risk. Think about it like this. With car insurance, accidents are totally random, independent events. A crash in one town has nothing to do with a crash 100 miles away. But agricultural disasters, they're correlated. A massive drought or a big flood doesn't just hit one farm, it hits every farm in the region all at once. For an insurer, that's an absolute nightmare. It's like trying to insure a whole forest against a fire. If one tree catches, they might all go up. The potential payout would be catastrophic. The second huge hurdle is what economists call asymmetric information. It's a fancy term for a simple idea. The farmer always knows more about their own risks than the insurance company ever could. They know their soil, their equipment, how hard they actually work. And this information gap, it creates two classic problems that can absolutely kill a market. So this information gap leads to a couple of really tough problems. First, you get what's called adverse selection. Because the insurance company has to charge high prices to cover all the uncertainty, who's the first in line to buy a policy? The farmers who know they're on risky land. This makes the pool of insured folks even riskier, which pushes prices even higher for everyone else. And then there's moral hazard. Once a farmer is insured, maybe they're a little less careful. Maybe they take a risk they wouldn't have otherwise because, hey, they've got a safety net. You put those two things together and you can see why it's so hard to run a private crop insurance business that actually makes money. So, because the private market can't really solve this puzzle by itself, governments have to step in. In Italy, and really all across the European Union, there's this long history of public money being used to try and build that safety net for farmers. And we are talking about a staggering amount of money here. The source material shows that since the 1980s, Italy's National Solidarity Fund has funneled over 17 billion euros into this exact problem. That money goes to direct disaster relief, but also to subsidies that help make insurance premiums more affordable for farmers in the first place. Now, this policy didn't just pop up out of nowhere. It's evolved over time. It kicked off back in the 70s as a national relief fund just for Italy. But by the 2000s, the focus started to shift to a bigger European Union-level approach. And then in 2013, the EU's big Common Agricultural Policy, what they call the CAP, officially rolled out a risk management toolkit to help fund these kinds of insurance programs across all its member countries. Okay, so this is where the study gets really interesting. You've got billions in public money subsidizing this whole system. So the researchers asked a pretty simple but critical question. Who is actually buying this subsidized crop insurance in Italy? And let me tell you, the answer is probably not what you'd expect. When you look at the data, you see this massive imbalance. A whopping 80% of all insured agricultural value is concentrated in the north of Italy, which is the most prosperous region. In central and southern Italy, they only make up about 20% combined. And this quote from the source material really just drives the point home. The market is incredibly concentrated. The top 11 provinces, ranked by how much insured value they have, are all in the north. You have to go all the way down to number 12 on the list to find the first province from the central or southern parts of the country. So, what in the world is going on here? So, the researchers built a model to figure out, okay, what exactly predicts whether a farm is going to buy insurance? And a very clear profile started to emerge. It turns out that insured farms are way more likely to be in the north, to be bigger, to carry more debt, to have really volatile income, and, no surprise, to have received payouts in the past. And what makes them less likely to be insured? Well, if they diversify their crops, the old school strategy of managing your own risk without an insurance policy. So what this all seems to point to is that this public money, this safety net, appears to be disproportionately helping large, specialized, indebted farms, primarily in the country's wealthiest agricultural region. And that raises a really tough question, right? Is a system that's supposed to protect everyone really just helping the biggest players?
And that leads us right to the study's conclusion. The findings really strongly suggest that the current approach, which is so heavily focused on insurance, just isn't a one-size-fits-all solution. If we want to build a safety net that actually works for everyone, we might need to rethink the whole toolkit.
So instead of just throwing subsidy money at insurance premiums, the authors suggest we need a smarter, more diverse toolkit. What does that look like? Well, things like better access to credit, so farms can manage the normal ups and downs of cash flow. It could mean encouraging mutual funds where farmers can pool their risk together. And it also means supporting active, direct investments in protection, things like anti-hail nets. The basic idea is to help farmers handle normal business risks themselves and save the big public support for the truly catastrophic, widespread disasters. Ultimately, the whole goal here needs to shift. It can't just be about writing a check to farmers after a disaster hits. It has to be about building a more resilient agricultural system from the ground up, one that empowers farmers to manage risk proactively before it ever becomes a crisis.
And that really leaves us with this final critical question. As our climate gets more volatile and more unpredictable, farming is only going to get riskier. So the challenge for policymakers in Italy, across Europe, and really all around the world is to figure out how to design a safety net that's efficient, that's effective, and that's fair. One that truly supports all the farmers we depend on, from the smallest family plots all the way up to the largest agricultural operations.